Many traders who are accustomed to using equities are interested in getting into other sorts of asset classes. We're talking today with Kathy Lean about currency trading. So Kathy, if somebody has been accustomed to trading equities, how do they make the move over into currencies?
Well, I would say that it's not a huge leap to move from equities into currencies. I think the most important thing to start with is to trade what you know. For example, if you're someone that follows the U.S. economy very closely, then perhaps starting off with the U.S. dollar and focusing on what matters for the U.S. dollar is the most important. If you're someone who travels to Europe often, then and you know intimately about what's happening in Europe, then maybe you want to trade the euro. So I think it's a good place to start. So then, the next question to ask is, how do I turn that kind of view that I have on the U.S. economy or the Eurozone economy into a trade? Well, there's a couple different ways. I mean, first of all, the most common way that equity traders kind of transition is to take their tools that they're using in terms of technical analysis and apply that into currency analysis. And the reason for that is that currencies behave very well in terms of repeating their past price patterns, and that's why technical analysis is so popular, because the currency market trades on a 24-hour basis. So there's a huge amount of sample sets, making technical analysis in many ways more accurate in currencies than in equities. So if you love to use moving averages, for example, or you love to use Elliott wave, you can use that same type of technique in currencies. And then, if you're someone who loves to read the business news, or is very keen on how the U.S. labor market's doing, or you work in the retail sector and you know how retail sales may fare, you can and you know that retail sales may be, for example, very weak this month, and that's going to probably hit the indices. Well, it's going to most likely affect the U.S. dollar in the very same way, which is that if it's bad news for the U.S. dollar, bad news for U.S. equities, it's probably going to be bad news for the U.S. dollar. So start off by taking some of the same ideas that you have in equity trading over to currency trading.
Well, great perspective today, Kathy. Thank you so much.
It's a pleasure.
You're watching the MoneyShow.com video network.